presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 3:07 p.m. Eastern Time. 53 minutes left to go in trading, and we have market slightly in the red. A little bit of a reversal of the pop we got yesterday. So to tie into everything of where we are, your Fed decision on Wednesday, okay? He sounds a little hawkish. You trade lower, you catch a pop, right? We get CPI, you get jobs, PCE jobs, and jobs is where it is on the revision, okay? We're talking about BLS getting fired, all of that. You caught quite a reprieve in the markets yesterday, folks, and we are getting a reversal today. In this 63.25 area on the S&Ps, you have the NASDAQ 100. We're already below that area right now, okay? And I say below, as in the majority of that area. Yeah, we're breaking below. Volume is picking up on the last 15-minute bar that just came into 3 o'clock, and we got 1 hour left to go in trading right now. And let's take a look at the volume. All right? Now, on the S&Ps, let's kick it off with the S&Ps first. You talk about a couple days of volume, man. Okay? You come in Thursday, you come in Friday, and look at the pop. Now, yesterday's pop, folks, wide price spread. Okay? You almost took out all of Friday's candle. But the problem is you didn't even have as much volume on Monday, being yesterday, as you did on Wednesday, which was a Fed day. But all things considered, that was quite a day yesterday. Following the expansion lower, you catch a pop and you do it on slightly lower volume and you get a reversal today. So watch out as we come into this final hour, man. Same thing in the NASDAQ 100, okay? Look at that volume spike we had on those 2 days, folks. Okay, this market had been coiled, just higher prices, lower volume on a continual basis, and then kaboom. We get a couple days, and then all of a sudden yesterday, everything was out of the market. And that's not quite usually how it works. Excuse me. So today we're giving back some of those gains, and we'll see how they hold for the final hour. Yields in dollar. Part of the biggest focus out there. I talked about the top of the market update. We hit 4.18 this morning. We're at about 4.2. What was so interesting yesterday, right, is that you had this massive move in yields. And meanwhile, you had no recoil whatsoever yesterday, right? So the market said, no, that move is real, okay? Look at the volume we got on the 10-year on Friday. Just huge. And the Treasury market, folks, is so much bigger than the equity market, okay? You catch a sign of strength from July 16th on the bottom, and you get some rip-roaring follow-through. And look how you take out everything, man. You took out everything back to July 1st on Friday. You did it on volume, and you get no recoil whatsoever. And that says to me that the 10-year, okay, the fixed income market, the big money there has made the decision that that was a game changer. And yes, it seems obvious. But I bring it up so notably because equities weren't so sure yesterday, right? Equities caught quite a pop yesterday as the fixed income market has made a decision, and we're at a critical area. This is the highs where we were on July 1st, okay? We were at 4.19. We were at 4.2. You were right where you were right now. So it is a critical technical area that the 10-year is back to 4.2%. And not to say it's different this time, but boy, we did not have jobs numbers back then like we do right now, okay? And yes, things can reverse next month, but if they do not reverse next month, the data right now is telling this market that we are going to higher price, we're going to lower yield. That's not going to change anytime soon, and that is going to keep pressure on this dollar. And what a nice, perfect bounce to 100. Okay, you have an area of support. It's turning into resistance. You're backing off, and we're at 98.80 right now on the dollar. And yeah, gold and silver. You know, I had a new position today in the gold report, folks. First time in a little while as we've been shopping around. And I haven't regretted having more positions in the gold report because we had a couple nice winners early in the year. All right. And as we approach this 1-to-1, we backed off a bit. And all we've done is consolidate. And for the first time in a while, I put in a new position in the gold report. You want to check it out? Check it out on the front page of TFNN. Silver doing the same thing, man. Okay. Now, silver's got highs of $39.91 out here. This is a daily we're looking at. You trade lower on July 30th, and we're trading into that bar right now, but you're going to have some decent volume today. And on a weekly basis, it's not showing up yet on silver. We're going to have some big numbers on silver. Because on a weekly basis on gold, right, check that out. You would have thought it would have been very difficult to get above the volume bar of July 21st. That was a big volume bar, man. And you do it in the gold contract. You do over $1 million, and you do 1.123. You trade higher. You engulf the last few bars. And of course, we're coming up to these highs. And listen, I'm not looking to a run to 4,500 right now. Okay. But the pressure's on right now. And I think we have a little bit of a change of sea in terms of the yield, in terms of the sentiment, and in terms of the economic data, which is going to drive yields, dollar, and commodities. So get ready for it, baby, because that 10-year, oof, you talk about a move to higher price, folks. Okay? And it usually doesn't come in one and done. And we were chopping around. You get that move on one day on Friday, and yeah, that's a perfect way to come into this high, and we're pushing higher on the 10-year with a yield of 4.2%. So listen, if you're thinking about locking in, whether it's CDs, okay, and CDs is a little bit of a different story, of course, because banks might need capital, etc. But if you're thinking about locking in any of those, folks, there's a real risk here that the Fed's going to need to cut. And I encourage you to think about going out a little bit. You know, if you're in retirement, if you got CDs with a retirement account, you keep that separate from your trading account maybe. You're looking at still, I think the 5-year ladder on a CD puts you close to almost 4%. Okay? And we have jobs right now that who knows if we even added any jobs over the last 3 months, right? If you got revisions of 258,000 because nobody is replying to the first month of that survey, then who's to say if we're only averaging 33,000 jobs a month for a 3-month average, there is variance in that number. And the plus minus is going to put you somewhere around, maybe we're not even adding jobs, point being. That might be the move, okay? And I think the market's reacting, and yeah. So even on yesterday, when you compare the move we had in yields, there was no reprieve yesterday. And you can make the case, as I try and go round and round, about, okay, well, maybe the market's saying, you know what, we have yields dropping dramatically, the Fed's going to need to cut, the economy's weakening, but maybe equities will be okay. That's possible. Anything's possible. But if you have an economy that's weakening to the degree that we're not adding jobs anymore, the market being priced at near 6,400 in the S&Ps might have a little bit of volatility coming down the line. Yields, 4.2%. S&P's off by 21, folks. We got the NASDAQ 100 off by 142. We're coming back with our man Basil Chapman. He's got a webinar a week from today. We're going to talk about it. Don't go away, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got the S&Ps off by about 22 points right now. Market slightly in the red. And right now, as we do each and every Tuesday at 3:15 p.m. Eastern Time, folks, we're going to jump over to our man, Basil Chapman. You can listen to Basil every trading day, 10 a.m. Eastern Time, with the Tiger Technicians Hour live right here at TFNN. And you can also, folks, on the front page of TFNN, okay, you will see the opening call right there by a man, Basil Chapman. And he is announcing, folks, a webinar. You're talking about 1 week from today, Tuesday, August 12th, 4 o'clock, identifying trend changes and what action to take. We're going to talk about some of that. Folks, we're going to talk to Basil while we're talking to him. Remember, you can sign up. It comes with a 30-day money-back guarantee, folks. You can sign up whether it's for a month at $149, 6 months at $695, a year at $1195. They all come with a 30-day money-back guarantee. You're going to get his outstanding newsletter for 30 days, and you'll gain access to that live webinar a week from today. Basil Chapman, good afternoon.
Good afternoon, Tommy. How are you?
I'm doing fantastic. How's your Tuesday going?
Very good, thank you.
So, Basil, we got quite a market here, but I know you and I have been talking, and you're excited about this one. So please tell the listeners and the viewers out there what you have going for your subscribers a week from today for the opening call.
So what I've done over the years using my Chapman Wave methodology is that whenever there's an opportunity after a particular trend has been in place for a while, I try to assess where we are and what are the chances are that there's going to be a reversal of trend. And I always look at time frames. So the daily time frame is the most important, and then you get the weekly, and then you get the monthly. So when trend changes occur, you might get quite a change in the texture of, say, the short term. But in the long run, it actually doesn't even impact the other longer term charts. And that's kind of what we're looking at here. And I was anticipating there was a chance that we could make some kind of a double top in the Dow in this 45,000 range. And that's kind of what we did. And we went to a peak D. And for those of you who know my work, peak D is where other things can happen, where you often get a very sharp pullback. And that's kind of what we did. So we were fortunate. We went short. That was on the 31st. That was the day of the turnaround for the Dow. But what's really important is that we also started a short position in the, oops, I typed it into the den instead of into my chart. Let me just do this. There we go. In the S&P at the exact day of the high, the S&P went to 6427.02. And all my assessment of what was going on suggested that in the very short term, and I keep emphasizing over and over, these weekly charts and the monthly charts, but especially the weekly charts, are really strong to change the character, to get what I consider really important, the 9-period moving average over the 14-period moving average, to get that to turn pink, meaning it goes under the 14-period moving average and goes from green, positive, to pink, negative. It's going to be a pullback into the 5,900s for the S&P, and I just don't see anything like that. So this I termed as a short-term pullback. And one of the things that I always talk about is if you're able to get the ictus, the very moment of the turn, when the price moves back either on the upside, and we've done this for the upside as well, very often in the markets, gotten the lows, or the highs, what happens is once the trend starts, if you look, in other words, we're over here, and this is the candle of the 31st for the S&P. We're over here. So that was fantastic on Friday, but now you've got this very strong, we filled the gap, very strong move up in the S&P. But my technicals are suggesting that 9-period moving average, which is still green in the daily chart, is turning down, and then it's going to go pink. But what's very nice is that so far our stop is not hit over there. And that's what I mean. Okay. That's what I want to be able to teach in this particular webinar. A couple of things. One is, in the turn, how you can use money management to be able to benefit from the turn and also have this comfort factor. It's really important. For instance, if now I was to start the short, wow, it's so whippy, even in an hour, I could be out of that position. So it's very beneficial, both morally and technically, and in terms of your own peace of mind, to be able to try to get that exact turn. So that's number one. Number two is many of these charts are just now starting to turn down. For instance, GE, which we are still long from the 197 area, today went to a higher high. It went to, where did it go to? I use different techniques I've developed over the decades. One of them is to look for round numbers. Back April a year ago, I kept mentioning how the semiconductors and all the tech sector stocks kept making round numbers at highs. That to me says that fund managers are desperate to get in, and they just say, get me in at 183. They don't say point whatever it is. They just, that's where they. So what we're seeing today is what was the all-time high for GE this morning? 277.00. So, and it's also got a potential Chapman wave 2-bar reversal, meaning there was just a fractional change between the highs of the one day and the next day. So I'm going to watch this closely, because if GE takes out the next 2 days without making a new high, if it takes out the low today of 268.62, then I think that we're starting to have a digestive phase of one of the very best stocks on the market, which is General Electric. But at the same time, look at Microsoft, which we're also long from the 338 level. We've still got some left. There's a core position. Went to 555.45, a leg F, it turns around, and it had a round number open the next day, and now it's trading a round number of 535, and it's trading at 528. So if in the next 2 days it closes above 535, it says, oh, maybe you need another technique. But if it actually takes out the 522 support level, that says now you've got another. This is a Dow stock. GE used to be, but it's not. So I'm using all these different techniques to explain, not just in the Chapman methodology in terms of the notation, or even just look at the 9-period moving average in the Microsoft. It's so fantastic to really get Microsoft to turn negative with that 9-period moving average. It would have to be, to go pink or negative, it would probably have to be down to the 509 level. So this is a work in progress, and this is what I try to emphasize. Don't think you're going to pick the exact high, and then that's the one that, it looked fantastic Friday, but you've got to be prepared for these turnarounds that take time. And you know that buy the dips has been the mentality and for months. And I think that's going to change a little bit in this particular phase right now. And I'm not expecting that much, but I am expecting choppiness in August, and then maybe sometime at the end of August, maybe even beginning of September, we start another phase to the upside. So this is what I want to discuss. Why? Because it's pertinent to where we are. And then even though we have already, from July the 31st, we've already gone short, we've already got our positions. There are other positions we want to take to the downside, looking for further weakness. But at the same time, it's preparing subscribers for what I'm anticipating is going to be a really great buying opportunity. For instance, Robinhood, which we are still along from the 16s way back, went to 113.44 back on the round about the 18th or so of last month. And it's starting to digest these gains. Well, it slipped down to 93 3 days ago. I would like to see 95 to 91 to say, hey, is this where we can put back a whole chunk of money back into Robinhood?
Sure.
Because the weekly chart is so fantastic. So this is a preparation and it's an anticipation, and it's using Chapman wave techniques. So I just thought, and even gold, gold is moving very much high. We've kept our gold position. CD, which is core mining, almost at a recovery high at 97 from just recently at 997. We've been long. So yeah, this is talking about the different sectors, what stocks look,
Folks,
what we want to
head on over to the front page of TFNN. You'll see that banner right there. Basil, we appreciate it. We look forward to the Tiger Technicians Hour tomorrow, man.
Thank you, Tommy.
Have a great night. Folks, check it out on the
You
front
too.
page. We're coming right back with Tim Moore. Stay tuned.
For some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks, and that may have been my bet. As I think Mr. Tim Ward was skipping today for whatever was going on. I think he had mentioned that last week. We don't have Tim just yet, but he will be back on Thursday, I believe, coming up as he is usually Tuesdays, Thursdays at 3:30, so look for him then. And let's take a look at some of the stocks that are moving today. So Palantir, up 7.1% right now. You catch a pop to 176, and boy, you talk about growth, man. Now, growth, but then there's multiples, okay? Second quarter revenue jumped 48%, more than $1 billion. That was the first time they've earned $1 billion in a quarter for revenue. This is not income. Market was looking for $939 million. Okay, they blow away expectations. Period. Now, they know the words to say. Okay, astonishing impact of artificial intelligence technology, and yeah, they're beating analyst estimates everywhere, man. Full year, they're looking for about $4.14 to $4.15 billion. Now, I talked about this on the morning program. I'm not sure if this is the one that says it. This morning, they were talking about that the forward price to earnings is 277. Let's see if it's this one. No, it's not. Could it be? No. So they're one of the top 20 largest companies in the world now. Their forward price to earnings is 277. That's earnings, not revenue. Okay. Tesla is at 177. They're at 277. They take in $4 billion a year in revenue, and their company is worth 100 times sales. So imagine what that says is, and this company is going to grow exponentially, right? But if this company was not growing, okay, then you would need to, when you bought this company for $400 billion, and this is not a good example because they're growing, but to show you like how much money it is, if you bought it for $400 billion, which is the market cap of this company right now, okay, let's pull it up exactly where we are. Let's see. Because this is where you want to, when you look at equities like this, okay, yeah, $405 billion market cap, doing $4 billion in sales, and they are growing at 40, 50, 60%, okay? So that number is going to grow magnificently in the years to come. But if you spend $400 billion on this company, you would need to make $4 billion a year in profit for 100 straight years to make your investment back. They have $4 billion in sales, not profits. Now, they have great margins to go along with it, and they're going to grow remarkably during that period of time. Okay. U.S. sales, how about 68%, right? Government revenue climbing 53% in the quarter. These numbers can rise. But I implore you to imagine the possibility that they may be experiencing growth that may be ahead of the longer-term averages, right? Yeah, they got a 10-year, $10 billion deal with the government going on. They combined 15 prime contracts and 60 related contracts with the Army into one single deal for $1 billion a year. Well, they better really up that ante, man, because they have a government contract for $1 billion a year, and the company's worth $400 billion a year. Nonetheless, we take a look at the price and volume on this equity. And you got volume, man. That's a daily. You talk about it, right? Now, it doesn't match with the June 27th number, but you put this on a weekly, and that's the worry. Okay, look at the volume drop off on a weekly basis on this. Right? March, the April acceleration, this thing goes stratospheric from 65. You're going to be tripling in price from the April lows, folks. Tripling in price we're approaching. What do you got? 195 triples price from the April lows. But look at the volume. Now, this week is going to change that. I imagine it's only Tuesday. Pull this up. So, yeah, you'll get some volume right now. But it's not going to compare to like these days, probably. These weeks, excuse me. there's a trend there, folks, okay? And if that trend continues, you are trading to prices that put this company as one of the top 10 companies pretty soon. You're top 20 right now, and you're taking in $1 billion over 90 days. We got companies taking in $120 billion over 90 days, and they're much larger. Hey, multiples, right? Jump around to some of the other equities. So Palantir, let's talk about some of the chip stocks. You jump over to NVIDIA. I mean, just remarkable strength, man. NVIDIA looks like you're jumping up to 195 to complete the 1-to-1. There's no pullback here on a B. Okay, talking to our man Basil Chapman, that webinar coming up from a week from today. Check that out, folks. If you haven't checked out one of Basil's webinars before, outstanding job. It's a 90-minute webinar. Next week, a week from today, 4 o'clock till 5:30. And yeah, there is no B on this leg, as this market has a straight shot from the lows of April from 86. And, you know, that bar shows up as red last week. But there's no pullback. That's actually a higher bar. You can make the case you rejected that 183 high. You had the market cascade to lower prices. This thing accelerated on Thursday from 183. But look, we're right back to the highs of 180 on NVIDIA. Excuse me. AMD down by 0.9%. We talk some chips. And as we talk about Palantir, yeah, you talk about pharma chips and you talk about pharma and chips. And yeah, how about 250% when you're talking about pharmaceuticals? Surprised you don't get a bigger reaction in some of those pharma companies today. But Trump's comments, we'll be putting an initially small tariff on pharmaceuticals, but in 1 year, 1.5 years maximum, it's going to be 150%, then it's going to be 250%. We want pharmaceuticals made in our country. And then semiconductors and chips, separate category, we're going to be announcing those. The e-commerce department, it should be the e-commerce department. Check that out, right? The Commerce Department has been investigating the semiconductor market since April to set the stage for possible tariffs on an industry $700 billion in global sales. Man, you talk about it. All right. So AMD slightly lower at the market. NVIDIA barely lower by 0.6% right now. You jump over to Intel shares, though, catching a little bit of a boost. And that would be an issue of probably domestic versus international. And there you go. Intel up by 3.8%. And boy, you talk about some rough goings technically, though. Intel shares off of the lows near about $19. We hit a low of $18.97 on Friday. We're trading at $20.24 right now. S&P's off by 25. Stay tuned, folks. We're coming right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got the S&Ps right now down by 26 points, or about 0.4%. NASDAQ 100 off by 149. NASDAQ 100 near in the session lows. And right now, folks, we're going to jump over to our man Tim Ord. We talk to Tim every Tuesday and Thursday at 3:30. You can reach Tim every trading day at his website, ord-oracle.com. And don't forget, folks, he's got a couple of outstanding webinars. The 6 secret ratios every trader should know with Tim Ord. You go to the front page of TFNN. You hit the services tab. We talk about many of those ratios, folks, every week when we talk to Tim. The TLT VIX, the SPY VIX, the trend panic levels, and then also the secret science of market tops. How to identify market tops. Check those out as well. Oh, there we go. I'm back. Apologies for that. Tim Ord, good afternoon.
Yeah, good afternoon. Sorry, I had a hard time getting on to signing on Teams. For some reason, they wanted me to go through a proof that I was me. So
I've gotten that before, Tim.
I got it.
I know. So. I've had that verification before. Believe me, it's the Microsoft. They're all over it now, I guess. But thanks for joining. So let's get into the charts, man. We got a little bit of a market. What are we looking at, Tim? Go for it. We got your charts ready to go.
All right, stocks. We talked about it. They wanted to look at the semiconductor. It is an ETF.
Yeah, here we go.
Pardon?
I'm sorry, I said, yeah, here we go. I almost forgot about myself. That last question talking about the semis. Perfect. Let's take a look.
Yeah, semis. So anyhow, back in April, we had a selling climax. We had a 50% increase in volume. Actually, 30% works pretty well. But, they stick out like fingers. And obviously, that's a finger right there. Then right after you have to have a selling climax, you have to have a buying climax. If you don't get a buying climax, you're going to get more selling. And sure enough, we did have a buying climax. Volume increased to not as high as the selling climax. But if you compare this volume to before it, volume was running, I don't know, looks like about 75 million shares. So you went up on 125 million shares. So that was the sign of strength. That's what the SOS is for. And that's what you have to have. So the bottom's in on the monthly charts. So let's look at the weekly chart, see where you're going. All right. So we had the sign of strength, and you have to get above the previous highs. Well, the previous highs in this case is right here. And you have to have a sign of strength through those previous highs, and that's exactly what happened. So so once you get above the previous highs support. So what's going to happen here? Probably consolidation. You jump through the previous highs, and how this is going to work out, don't know, but 230 area on the semiconductors is in that range, is going to be support. And the longer the base of the previous highs, this was like August of last year, so it's almost like 9 months of basing, and you got above it. So that's a real strong support. It's unlikely you'll get below 230. So anyhow, it's a bottom end. You got a consolidation similar to probably what the S&Ps is going to do. How long this sideways consolidation could go, I think probably in September, October. So I think we just may bounce around in here and create a B wave, then up and at 'em. This high will be broken, but we'll build a base probably for another several weeks. I put it that way. So anyhow,
Okay.
it's bullish.
Thanks for taking a look at it.
Yep. So that's that. But is it a hurry to buy right now? You know, you'll probably get a couple of different opportunities to buy at 230. I'll put it that way.
Okay.
Gold issues. This is a little bit confusing here. I marked times in the past where we had panic, and we had panic at this high. But most of the time, I don't know, 95% of the time, you come panic at the lows. So it's a little bit unusual market. It's kind of a curveball to me. I didn't really see that. I've been doing this far as the trend tick thing back in the early 90s. And I never really seen this, so I'm not sure what's happening here. I do think the bigger trend is up. We did have kind of a selling climax. Normally when you get volume going up steady like that, not like a finger, but kind of steady, you usually go back down and test this low. That would be last Friday's low at some point. I still think we'll probably get back down to the previous highs of February, which is basically this line right here, which is around that 610, 608 in that vicinity. Sure. So probably try to rally, probably come back down. Don't see really danger. We're in a bull market. I think this is just consolidation. This is the summer months. You got summer months. A lot of times you see these type of consolidations. So I don't think anything. Basically, here's what I'm looking for. Whoops. Let's get back down. Here's what I'm looking for on a this is the weekly chart on the SPX. So okay. I'm thinking we go up. We have a bearish engulfing pattern there. A lot of times those highs are tested. But in general, I think we just move sideways. And right at the end of these sideways moves, you start getting fear in the ticks and trend. And I bet about sometime in September or October, you'll get a 10-day trend probably up around at least 1.2, if not higher. And then we'll start rallying again into year end to next year. I think this is this bull market. This is a halfway point of the next move up. What we're doing right now, they're going to kind of bore you here for the next several weeks. But in general, there's going to be another big rally, as big as this one, going up into the highs. So,
all right, get ready, folks. Right?
Yeah. Don't have a lot of time, I guess. So I'll flip to gold here real quick. But this is a current reading on the RSI on the monthly chart of XAU. This chart goes back to 1988. Shown this chart before, and we're up around 74 right now. So I don't think this is a breakout to the upside. I'm not a big bear here, but I think this is kind of like the last hurrah. I went short yesterday on GDX. Been better if I did it today, but it is what it is. But it's never a good idea on a monthly chart to get long when the RSI is 74. I'll put it that way. Can the market go higher? Yeah, you can, but unlikely to go very much further. I think this is kind of the last grasp up. This is earlier today. This is a 18-day average of the advanced decline. In other words, advanced decline for the stocks in GDX. And this is the up-down volume for the stocks in GDX. And if you notice, advanced decline is horrible. You know, there's very few stocks carrying this rally. Just, you know, AEM, and I kind of looked at a couple of them. But, you know, last time we got this type of divergence was going, you know, that was real strong too. I got out there, and now I got short here. Market kind of just went sideways, so I think this is a good short. Could be wrong. You know, the monthly charts don't fail. You know, getting back to this XAU chart, you know, what's the chance of that failing? Is pretty rare. Can we move? We really can't move up much more, but we can move sideways, I guess. And that could happen, but I don't think that's going to happen. I think we need a pullback. You know, we had a really nice impulse wave all the way up here for starting in August of 2024. So the market has rallied really strongly for a year. So are we due for a rest? Would seem so. So I'm thinking that's what would come up here. So that's what I'm saying. So
that was great information, Tim. You crammed it all into one segment. We appreciate it with semis as well. And yeah, some of those levels, you go through those levels and I say, my goodness, quite a pullback, right? And then you say, that's only pulling back to where we were in March or April of this year, which is remarkable. Yeah. And then it says, okay, well, that's all right. Tim, thanks so much, man. We appreciate the time, and we'll talk to you on Thursday.
All right, thank you. Right.
Have a great couple days. Folks, we got one more segment. S&P's off by 24. Don't go away. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, and don't forget about Basil's webinar, folks. A week from today, if you've never checked out the opening call, even if you have prior, great time to sign back up. You gain the newsletter for a month. You'll get it from today until next week. You get the webinar a week from today. 90 minutes identifying trend changes and what action to take. Basil will be talking about sector rotation, stock selection, trading around a core position, which Basil does so well in his newsletter, using money management to maintain your capital, and the technical tools that help identify trends and trend changes. So check that out on the front page of TFNN, and that'll be a week from today. And the markets are going to be finishing right now, session lows right now. I mean, moderate action. S&P's down only 0.4%. No big price spread. But yeah, we got a little bit of weakness coming back in this market after a pop yesterday. NASDAQ 100 off by 0.6%. But boy, some of those chip companies, when Tim was going through the SOX, Okay, when you're talking about the semis, now what's so interesting about the SOX, okay, is that the SOX is not NVIDIA, okay? The biggest holdings in the SOX, and there's some winners and losers, man, which is why that SOX, when you look at it, okay, that Tim was taking a look at. You go back on a weekly, right? We're testing. We're just right back to where we were in March of 2024. Well, in the SOX, you got AMD. That's the biggest holding, 8.7%. Well, there you go, right back to where we were last March. You talk about some volatility. NVIDIA is in there, just not the biggest holding, I meant to say. They're not the top holding. NVIDIA is second, okay, at 8%. AMD's 8.75. NVIDIA is 8%. Broadcom, which has been a juggernaut, is third at 7.7. Then you get Texas Instruments, okay? Then you can see how winners and losers, okay? Diversification. You get Qualcomm, my goodness, from 230 down to 146, okay? Micron, 157 last year to 109 right now. Marvel from 127 to 76. We got a market, folks. We got the S&P's off by 28 right now. Folks, thanks so much for tuning in for the Tom O'Brien Show. Have a great night. Have a safe night. We'll see you back here at 9 o'clock in the morning for the morning market kickoff. Have a great one, everybody.
Building wealth